Welcome everyone to the CFO Swinger Watch Report technical analysis video for the week of September 30th through October 4th. With that, let's begin with the markets. So quarter 3 is about to come to a close once Monday is over and quarter 4 is just around the corner. Time is flying by and I cannot wait to see what the markets have in store for us for the last quarter of fiscal year 2024 because it will set up how fiscal year 2025 will begin and how the quarter 1 of fiscal year 2025 will perform. And so last week, specifically last Friday, we saw the S&P 500 ETF or ticker symbol SPY closing right underneath the current new all-time high price print of $574.71. And now if you guys remember, I've previously stated that once we're able to overtake the previous all-time high price print or the previous pivot high point at $565.16, we should be seeing a continuous and maybe even consecutive run up higher into new all-time high price prints. Again, that's plural. And so for the last 2 weeks, we actually saw that. It wasn't perfect, but we continued to make higher highs and higher lows, but at the same time, we made continuous new all-time high price prints. Yes, it wasn't consecutive, but we did make continuous new all-time high price prints. And so just based on this premise alone and how the last 2 weeks have performed, this is not bearish at all, despite what everyone else has been saying about the overall state of the economy, overall macro analysis of the markets. Because again, the price is the truth. The price is telling us that, hey, we are in a bull market. And just the fact alone that we've had a pretty volatile quarter 3 of this year, like we saw in the corrective dip in August and the corrective dip in September, we saw buyers coming right back in and stepping up to make sure that the overall gains that we made so far in quarter 3 were not lost. And thank goodness for that, because these buyers have led us into a new uncharted territory. But now, what does quarter 4 have in store for us, especially this week? Well, I have given you guys all the details that you guys need to know in the CFO Swinger Watch Report. So make sure you guys read the report first before you watch this video. And so if that is you right now watching this video before you read the report itself, pause this video now and go back to the report itself, specifically the market summary section of the report, and read it. All right. And so just simply from a technical analysis perspective, I would like to see personally a new all-time high price print once more before we see a small pullback. Now, how small of a pullback am I expecting to see? Well, maximum, I want to see a textbook 5% pullback from a new all-time high price print. And again, I really don't care if we just hit $575 as a new all-time high price print, because again, the current new all-time high price print is sitting at $574.71. Okay, so I do not care if we just hit 575 and then reject and then start a new corrective move to the downside. Okay, all I want to see is a new all-time high price print and then a corrective dip to occur. And so if we did see a 5% pullback from let's say 575, we would be just right back to September's lows, which again is not that far away. Now, for a minimum, I would want to see personally a 3% pullback, which would bring us right back to this $555 support level on the daily time frame. And I would love to see the price flipping this previous resistance level and also a previous support level and turning it into a new significant level of support where the price can be lifted back up higher, creating a new higher high pivot point compared to the lows of September and compared to the lows of August. So we will have a very nice uptrending trend here with a nice ascending support trend line. Okay, so this will be very, very ideal if you get that very shallow dip of 3% if we were to presume that the next all-time high price print will be sitting at $575. Okay, so again, there are a lot of reasons to kind of focus on a potential market dip leading into the first month of quarter 4 and into the second month of quarter 4. And I've written all about this in the report itself, so make sure you guys read that first. So again, from a technical perspective, ideally, I would want us to revisit this $555 whole number support level and create a new higher low. But if we're being realistic, it would make sense for the price to come back down to retest September's lows. So around, I guess, a range of $539 or $540 if you guys want to round up to $542.50. So again, 540 to 542.50 might be the range that you guys might want to look out for if we begin to see a corrective dip starting to occur, and if we start to see overall market volatility increasing and expanding because we have a major catalyst. And what is that catalyst? November presidential elections. All right. So with that being said, let's take a look at IWM or Russell 2000. So what has the Russell 2000 been doing? Well, first of all, for the last couple of months, well, for most of quarter 3 so far, IWM has been very volatile. And so you guys might be thinking, wait a second, what is this volatility about, right? What has IWM done so far after breaking out in July? Well, this current price action just completely reminds me of the fact that the Russell 2000 just has been moving in the anticipation of rate cuts. And so what that means to me is that the Russell 2000 has yet to see any type of a real movement or breakout to the upside once we start to see the actual effects of rate cuts, not just this single official rate cut that we saw and we got in the month of September. So again, this entire volatile move, or just an overall move up higher since that breakout over this psychological $200 level, has just been the simple anticipation of the first official rate cut for September's FOMC meeting. So that is just simply what IWM has priced in, the anticipation alone. And so to me, that clearly states that IWM has yet to see further progress from the actual effects of a rate cut cycle. And so I will keep my long-term targets that I've had for IWM since, well, forever, right? I believe since 2022. And so for IWM, okay, let's actually move this off. Well, actually, let me read this for you guys. So I wrote this back in 2023 when I said IWM is well off of highs when compared to the S&P or NASDAQ, so it has a lot of room to move this year. And so obviously that did not come to fruition, but once the last quarter of 2023 came around and into 2024, we saw a massive run up higher in anticipation for a potential year of rate cuts, which obviously did not come. Okay, again, hindsight 2020, but based on the quarter 3 performance of IWM, if you take a look at the 3-month time frame chart right around here, we see that quarter 3 was a pretty successful, a very successful quarter for IWM. All right. However, again, I am still expecting more upside left for IWM because the economy has yet to see any real effects from a rate cut cycle. And so the market is not reflecting that based on how IWM has been performing for most of quarter 3. Right, so IWM, I still have targets to 226.50, 233, and eventually 240. So I do have some pretty conservative targets because again, we have yet to see any real effects of the rate cuts to any small cap companies or even mid cap companies if you guys are looking at mid caps. All right. So I've also provided a plethora of other reasons like China in the report alone about IWM. So make sure you guys read that as well. All right. So with that, let's take a look at our first and last swing trade idea for this week. FCX or Freeport McMoran, hopefully I'm saying that correctly, is looking like a pretty good short for this week and possibly into the entire month of October if we do get that weakness or possibly seasonal weakness into the end of October and into the first couple of weeks of November. So FCX had a massive run up to the upside once we got that news out of China, that Chinese stimulus into the overall economy and the markets. And FCX was a huge beneficiary once we saw all the other publicly traded Chinese names rocketing higher into the stratosphere as all of them experienced a massive short squeeze. And so FCX literally reacted in a very similar manner as if you take a look at the weekly time frame. Just last week alone, I mean, this is a massive candlestick, right? I mean, there's not much for me to say here. It's a very, very bullish candlestick. However, okay, here's that little asterisk. This is extreme exuberance coming from the bulls. Because again, FCX was just a simple beneficiary to what Chinese names were doing or just what the overall Chinese market was doing. So for FCX here, I have a short entry point under $51 because I truly believe that this commodity has a lot of room left to at least fill in all of these gap up areas that buyers have made. Yes, these are very bullish gap up areas because again, it's a very rapid move up higher. But again, this is too rapid and too impulsive of a move to the upside where it will be easy for shorts to come back in and put pressure on the bulls to finally take some profits into this massive run up to the upside and from overall extreme exuberance and extreme bullish sentiment. And so just from a technical perspective, I would expect to see FCX seeing a gap close of this gap up area even without the help of overall market weakness. And that's just coming from a technical perspective. Now, last Thursday and last Friday, we were starting to see some profit taking from buyers. Why? Well, if this extreme exuberance were to continue, buyers should have been able to get past this major daily resistance level sitting at $52. However, we were not able to see that as the price closed below this whole number level of $52 both on Thursday and Friday. And if you take a look at what occurred in the past here, for example, right around here, okay, the price was not able to get past $52. And even in this time around here, so this is back in early July, we had some fairly low buying volume. So that contributed to shorts coming back in and slamming the price below 52 so that buyers aren't able to close the price over 52. And then in the next few following days and weeks, we saw the price being absolutely slammed. Yes, there were news, there were demand and supply news coming out of China and etc. And overall, it was just a pretty weak few weeks and months for overall commodities, and not just for FCX, which is a copper specific name. And so if you compare just in this area to what we saw last week alone, we saw massive amount of buying coming in, but it still was not enough for the shorts and sellers that are sitting at this specific $52 resistance level. And so if we're able to grab a short entry point under $51, I want to make sure that a move below, a sharp move below actually is what I would ideally want. So potentially a V-shaped move down, I would want to see the first gap up here that we will encounter to be completely filled and potentially come back down to retest this previous daily support level sitting at $48. And once that occurs, I would also want to see this daily 10 SMA or red line here catching up to the price and coinciding with this $48 retest. All right, and at that point, I could care less what FCX does because I will be out of that short. So give us a nice 1 to 2 risk to reward ratio. All right, so, oh, my apologies. 1 to 3 risk to reward ratio. My bad. So 51 as the entry point and 48 as the maximum profit target for this short. Now, of course, ideally, if you were to see more selling volume coming in and maybe more bearish news coming out after that flurry of very bullish news coming out of China, then there's a chance that sellers can try to move and break below $48 and possibly even take out all the buyers that may be sitting at this SMA support or this daily 10 SMA and try to at least fill in halfway of this second gap up area that it will encounter as the price goes lower. And so at that point, I would ideally want the price to hit 46.50 and pivot away, because at that point, I would expect the daily 21 SMA, which is really far away from the price right now, to finally catch up to the price and coincide and retest with the price at this 46.50 level. So somewhat similar to what I would want to see occurring at $48 along with the coinciding daily 10 SMA. Right. So again, the overall premise of this short trade is just basically the fact that FCX has some extreme exuberance to the upside that needs to get released, and the fact that the daily 10 and daily 21 SMAs are so far away. And just from a percentage standpoint, let's actually use the 52 resistance level here, rather. Okay. And just drag down here from $52. Okay. We are over negative 15% away from the daily 21 SMA, and we're about over negative 10.50% away from the daily 10 SMA. So these momentum SMAs have a lot of room to cover, and I would expect the price to come down first to retest both of my momentum SMAs, my daily 10 and daily 21 SMAs. Alright, so that is it for this technical analysis video. If you guys liked what you heard, make sure you guys hit that thumbs up down below, and if you guys are new, make sure you guys hit that subscribe button. But on top of that, make sure you guys hit that notification bell icon that pops up afterwards so that you guys are notified when I am live on Tuesdays and Thursdays, or when I have uploaded a new video like this one. With that, have a great rest of your night. Good luck, and I'll see you guys tomorrow morning. Thank you so much for watching.